Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Nebius Group.
And if you find our talks useful, please consider subscribing, liking, and commenting underneath.
So today's going to be a fascinating one because we're looking at a company that is sitting right in the eye of the storm of this AI revolution.
Right.
But here's the thing. They aren't one of the names you usually hear about. They're not popping up in every single headline. Well, not yet anyway.
It feels like every time we turn around, we're just talking about the giants, right? The Googles, the Amazons, the Microsofts. It's always the Magnificent Seven. But lately, yeah, Nebius Group is making some serious noise as this neo-cloud player. And I have to admit, when I first saw that term neo-cloud, I thought it sounded a bit like, you know, a marketing buzzword.
A little bit, yeah.
Or maybe a bad sci-fi movie from the late 90s. So before we get into the numbers, and I know the numbers are absolutely crazy, we need to unpack that. What makes a neocloud different from, you know, just spinning up a server on AWS?
It's a really crucial distinction. And honestly, it's the foundation of the entire bull thesis here. Think of the traditional cloud providers, your AWS, Google Cloud, Azure, as the ultimate generalists.
Okay.
They are designed to do everything for everyone. You want to host a simple WordPress site for your bakery? Great. You want to run a massive database for a global bank? No problem. They do that too. They're like a massive sprawling utility, like the electric grid.
Right.
Nebius is fundamentally different. They are not trying to be a generalist. They're a specialist. And they are engineered for one thing, AI infrastructure.
So if I just want to host my email server, I'm not calling Nebius.
Definitely not. Please don't call them for that.
Yeah.
Their core business, their entire reason for existing is building the heavy-duty plumbing for the AI revolution. And this isn't just stacking servers in a cold room.
Yeah.
It's high-performance computing. They are an NVIDIA cloud partner, which is a very, very exclusive club to be in right now.
Right. I wanted to touch on that because being a partner implies a real relationship, not just being a customer.
Exactly. This gives them early access to the absolute cutting-edge hardware. Specifically, we're talking about the NVIDIA Rubin and Vera Rubin NVL72 systems and the Blackwell Ultra platforms.
Okay, let's pause on that because I think that's a huge competitive moat right there. We hear about the chip shortage constantly. Getting your hands on the latest NVIDIA chips is, well, it's like trying to get front row tickets to the biggest concert on earth.
It's harder.
It's harder. It's nearly impossible unless you have the connections. So why does Nebius get them? Why is NVIDIA picking up the phone for them?
It all comes down to that specialization we talked about. Because they focus solely on AI, they can optimize their entire stack, the cooling, the power, the networking, for these specific chips. NVIDIA knows that if they send their best chips to Nebius, those chips are going to be used to their maximum potential immediately.
But not just going to sit in a warehouse somewhere.
Exactly. Not waiting for some legacy data center to be retrofitted.
I was trying to visualize this for everyone listening. It feels like the difference between, say, going to a massive general hardware store where you can buy lumber and paint and maybe a hammer versus going to a specialized high-end precision tool shop. If you're just fixing a fence, the big box store is fine. But if you are Meta or Microsoft and you're trying to build the most advanced AI model in history...
You go to the precision shop. That's the perfect way to look at it. If you're training a large language model, you need massive throughput, low latency, things that general clouds struggle to provide at that scale.
And the proof is in the client list, right? You mentioned them, Meta and Microsoft. These are companies that own the biggest clouds in the world.
Oh, no.
And yet they're signing massive contracts with Nebius. Why? That seems so counterintuitive.
It's a speed and capacity game. That's exactly it.
Yeah.
There is a global shortage of power and specialized compute that's ready right now, not in 5 years, today. Nebius has that specialized capacity ready to go. They're essentially building the factories where the AI models of the future are being made.
And the big players need that factory floor space immediately to stay competitive.
They do. It's an arms race.
So Nebius is basically selling speed to these giants who are too big to move that fast. And that demand, well, it's translating into some financial numbers that are frankly hard to wrap my head around. So let's pivot to the fundamentals.
Let's do it.
We talk about growth stocks, but explosive feels like an understatement here.
It really is. I mean, if you look at the revenue trajectory, it's not a curve. It's practically a vertical line. In the first 9 months of 2025, Nebius reported revenue of $302 million.
Okay, let me play devil's advocate for a second. $300 million. It's a solid number, don't get me wrong, but in big tech, that's a rounding error for Google.
It is, but context is key here. You have to look at the acceleration, the rate of change.
Okay.
In the third quarter of 2025 alone, They did 146 million. That is a 355% increase year over year.
355%.
Yes.
That is wild. I mean, tripling your revenue is insane. But here's my skeptic head again. We've seen companies have one great quarter, right? Is this sustainable, or is this just a flash in the pan?
And that's the right question to ask, because revenue is backward-looking. As investors, we need to look forward. And that is where the story gets even more intense. It's all about the backlog.
The backlog.
Nebius currently has a contract backlog of over $20 billion.
Wait, hold on. Did you say 20 billion? With a B.
$20 billion.
So let me get this straight. They've made $300 million in revenue so far this year, but they have $20 billion of work basically waiting in line.
Precisely. And these aren't just, handshake agreements or letters of intent. These are multi-year deals with hyperscalers. Microsoft and Meta are specifically named. They have effectively sold out their capacity before they've even finished building it.
That's incredible. It's like selling out every condo in a skyscraper before you've even dug the foundation.
That's a great analogy, yeah.
So what does this mean for the next couple of years? How fast can they unlock that 20 billion?
It means their guidance is incredibly aggressive. They are projecting annual recurring revenue, ARR, to hit between $7 and $9 billion by the end of 2026.
Wow. From about 300 million to potentially 9 billion in ARR in, under 2 years? That's not just growth. That's a metamorphosis. It sounds almost too good to be true.
It sounds unbelievable until you look at the supply and demand imbalance in the market. There simply isn't enough power or rack space for the chips everyone wants. Nebius is just stepping right into that vacuum. If they can build it, the customer's already there, checkbook's open.
If they can build it. Okay, that's the key phrase, isn't it? Because this stuff is not cheap. You have to buy land, pour concrete, buy those expensive NVIDIA GPUs. So let's talk financial health. Are they running out of money trying to build this empire?
It's an incredibly capital-intensive business. There's no getting around that. If we look at the balance sheet, as of the end of Q2 2025, they were sitting on a pretty significant war chest. About $4.8 billion in cash.
Okay, that's a healthy cushion. 4 billion buys a lot of servers.
It does, but you have to weigh it against the other side. They also have about $4.6 billion in debt. So fairly balanced on paper, but the reality is they are burning cash. Free cash flow is negative.
Because every dollar that comes in the door is going right back out to buy GPU clusters.
Exactly. They're reinvesting everything. They're targeting capacity of 800 megawatts to 1 gigawatt by the end of 2026. And estimates for full build-outs at that scale run well over $10 billion.
Wow. So they are spending money as fast as they possibly can to fulfill that backlog. It's a high-stakes game. Does this mean they're just going to lose money forever? Is this one of those growth-at-all-costs stories?
Surprisingly, no. The turnaround of profitability is projected to be much faster than you'd think. I mean, currently, yes, the earnings picture is ugly. Negative PE ratio, a net loss of $120 million in Q3.
Which is what you'd expect when you're building out this fast.
Right. But here's the pivot. Analysts are projecting positive adjusted EBITDA in 2026. And by 2027, they're projecting over $5 billion in EBITDA.
$5 billion in EBITDA in just 2 years from a loss today.
That's the projection. And we're already seeing the efficiency improve. Their net loss narrowed by 61% in the first 9 months of 2025. So as that revenue scales up, the operational leverage just kicks in hard.
That is a fascinating financial picture. It's like watching someone sprint while juggling dynamite.
It is.
If they don't drop it, they win big. Now, clearly, the market is watching this. How has the stock price reacted to all this news?
The market has certainly noticed. The stock basically tripled in 2025. Right now, it's trading roughly between $99 and $102.
A triple in 1 year. That also implies a lot of volatility, though. Is this just a short-term pop?
Well, what's interesting is the longer-term view. If you had invested $100 in this company 10 years ago, it'd be worth roughly $779 today.
Wow.
That's a compound annual growth rate of about 22%. So this isn't just a flash in the pan.
But with the stock that triples in a year, you always have people betting against it. I'm seeing some chatter about a potential short squeeze. Is everyone a believer?
Oh, there are definitely skeptics. The short interest is actually quite elevated. It's sitting at roughly 15.47% of the float.
15%. That's a lot of people betting the price is going down. Why would they bet against a company with a $20 billion backlog?
Well, it sets up a very interesting technical dynamic. The days to cover ratio is around 2.76.
Meaning it would take almost 3 days for all the shorts to buy back their shares if they panicked.
If they panicked. Exactly. And if some positive news drops, say, they beat earnings or announce another massive deal, and the price spikes, those shorts might rush to buy back their shares. That buying pressure drives the price up even more.
The classic short squeeze recipe.
It's a coiled spring.
Yeah.
And you have a stock that is already trading above its 50-day and 200-day moving averages, which signals a strong uptrend. You have this powder keg of short sellers sitting right underneath it.
That sounds explosive.
It creates a lot of potential volatility to the upside. But of course, the shorts are there for a reason. They believe something could go wrong.
Which brings us perfectly to the reality check. We've painted a very rosy picture. What can go wrong here? What keeps you up at night on Nebius?
The number one risk here is execution. It sounds simple, just build the data centers, but it is incredibly difficult. They have a $20 billion backlog, but to turn that into revenue, they have to physically build. They have to get power permits, get GPUs from NVIDIA on time.
Right. A contract is just a piece of paper until you plug the server in. Any delay and that cash burn we talked about starts to look a lot scarier.
Exactly. And then there's customer concentration risk. We're celebrating that they have Microsoft and Meta, but that's a double-edged sword.
Too many eggs in one basket.
It is. If one of those relationships sours, or if Microsoft decides to pull more work back in-house, that backlog could shrink significantly.
That makes sense. What about the people running the show? Are the insiders buying or selling?
There has been some insider activity, and it's mostly been on the sell side. We've seen sales from Kira Rudinsky and filings from Arkadiva Lowe's.
Oof, insider selling. That's usually a red flag, isn't it?
It can be, but you have to look at the context here. The stock just tripled. This looks a lot more like routine liquidity and profit-taking after a huge run-up. We're not seeing what I'd call cluster selling, where every executive dumps their shares at once.
So it's more like housekeeping than a vote of no confidence.
That's how it looked for now. But it is something to watch closely.
Okay, that's fair. So for the listener who's thinking, okay, I see the potential, I see the risks, what should they be looking for next? What are the dates to circle on the calendar?
We have a major catalyst coming up very soon. The fourth quarter 2025 earnings are expected in early February 2026.
That's right around the corner.
It is. And the number to watch is $235 million in revenue for the quarter. They need to hit that to meet full-year guidance. If they beat it, it confirms the growth story is on track.
And beyond the earnings print, anything else?
The macro catalyst is any news on the NVIDIA Rubin deployments. Watch for news about Nebius actually getting these systems live. That validates their whole neocloud status.
So putting it all together, the specialized tech, massive backlog, execution risk, short squeeze potential, what is the verdict?
If we look at all the data, I'm leaning towards a bullish score of 8 out of 10.
8 out of 10, that's pretty high. You don't give 8s away easily.
I don't. But the thesis is just so clean. Nebius is a pure play on AI infrastructure scarcity. They have the chips, they have the contracts. That $20 billion backlog is a massive safety net, and they have that growth. It's rare to find that combination.
It's hard to argue with those numbers, assuming they can bolt the racks to the floor fast enough.
And the timeline is key. This isn't a trade for next week. This is a multi-year hold, looking toward that 2026 revenue inflection point.
So you have to be patient enough to let them build the factory. You're buying the blueprint and betting on the finished building.
Exactly. But if the building gets built, the rent checks are going to be massive.
It really is an incredible story of transformation. To go from millions to billions in revenue in such a short window, it just shows the speed of this AI wave.
It is. And it's a reminder that while the software grabs all the headlines, the hardware, the infrastructure, that's where the rubber meets the road. And Nebius has positioned themselves as a key gatekeeper for that capacity.
And a fascinating look into a company that might just be the most important player you hadn't heard enough about. If you found this analysis helpful, remember to subscribe, like, and leave a comment. Thanks for listening to Smart Wealth with Joshua.